you can take money to make money, but
Yeah.
but you can also creatively structure deals. You can also find win-win situations. I mean, partnerships, collaborations. Like I've done a ton of things where maybe no money's exchanged, but it's like, hey, why don't we share? I can share this hack, or I can connect you with these people, and we can find a way to win together. And if we don't, no harm, no foul. Like I'm not trying to collect on something if I can't deliver, but if we do, then something, there's some financial compensation. And so I've done a lot of those over the years.
Welcome to Seven Figure Entrepreneur Podcast. Today we have the wonderful Justin Donald, and we also have the wonderful Tyler Devin. This is going to be a good one. So, Justin, you got passed on to us from Ben.
That's right.
Is that what?
Ben
Is that?
Pekulski.
Yeah. Okay. Ben Pekulski. He was one of our previous podcastees. Awesome guy. He also coaches Tyler. He's coached me as well. Solid dude. Love that guy. Haven't talked to him in a long time. So yeah, let's just dig into it. Donald, what is it that you currently do?
What is it I currently do? I invest, and I, have a community of entrepreneurs that we're always thinking about ways to scale and grow different businesses. But, I just have an active mind, and I'm always looking for the edge, and always looking for, just the hack, that it factor, the X factor that maybe someone's missing. So, I've started companies, I bought companies, I've sold companies. I have a lot of fun investing in companies, and I find that the companies that I have alignment with, or that I have like some sort of like, a passion or an interest in, it becomes a lot easier to kind of work with them and help them, grow, and I guess de-risk my investment too.
Very
cool. And your brand, it's Lifestyle Investor, right?
Yeah, lifestyle investor. Yeah, my whole, I guess, goal is to let people know there's another way to live, that you don't have to be a slave to your business or slave to your, career, that, you don't have to have the golden handcuffs, which most of us put on at some point in time. Because as a business owner, it's like in the beginning, it's like you're pinching pennies, and you're doing whatever to get by. And then all of a sudden things get good and business gets good, and we become accustomed to a nice lifestyle. And then it becomes really hard to leave that lifestyle. And sometimes the things that we think we own end up owning us, including our business.
That's so true, man.
Very true.
I got to admit how my business has grown. I've definitely seen those ebbs and flows. There's times where it's easy. I almost feel like I can do nothing wrong. And then there's other times when it's not. Seasons change, challenges come up, maybe laws change. And at the end of the day, you're still a little guy trying to pivot and trying to make it through and navigate through all that. So I can definitely relate to that. Just so people have a background, I guess, where did you initially start? Like, I know you live in Austin, Texas. Did you grow up there, or tell us more about that?
Yeah, I grew up in Chicago, and I moved to Austin about 7 years ago, and I love it here. I wish I would have moved even sooner. It's just such a cool city and community of interesting people, every walk of life. But you have a ton of entrepreneurs, you have a ton of investors, you have a ton of, people in tech. It's just really fascinating. A ton of influencers. I mean, you get a little bit of everything out here. So it's been fun. But, I grew up in Chicago. I lived in the city for a while. I went to University of Illinois. Took some classes there that at that time they were one of the top business programs in the country. They were rated a top 20 program. And it was because they brought in adjunct professors that were actually professionals that just came to teach what they knew best. So I did a class on arbitrage strategy, where we could literally present strategies to our professor. He would put up the cash and split the returns 50-50 with us.
Are you serious?
That's so cool.
Dude, that's incredible.
It's nuts. Like I one of my classes, I got selected, 20 of us got selected out of the business school to manage $1 million of actual money for one of our alumni. And so we would, meet at a bar, talk about, what it was that, we felt like, we should invest in, or what we should sell. And we would then pitch it to the class the following week. So it was like every other week in a bar, every other week in the classroom, actually presenting a pitch to say we should buy or we should sell, which was cool. And we ended up making him money during that year in that program, in that class. So we had all kinds of cool stuff like that. My real estate professor was the largest real estate owner in Champaign-Urbana. He was my business fraternity advisor, and it was neat. So I kind of got into
What
investing in
school did you go
entrepreneurship
to,
early.
man? What school did you go to? This sounds like pretty high level, like
It
professors and
sounds like
stuff.
Yeah, University of Illinois, Champaign-Urbana. I'm not sure what the
Oh,
business
nice.
Wow.
program's like today, but it was top notch back
Yeah,
then. And I mean, we got real hands-on experience. It was cool.
that's
That's
really
so
cool.
cool.
Yeah, you
So,
never
so
hear about stuff like that.
not at all. I hope my son does something like that.
Totally. I'm not even
What?
giving you all of this. I mean, one of my professors, as a college student, bought an apartment complex that he lived in and then managed all the other units. So literally figured out how to do this as a college student and was rolling in dough as a college student.
I
Man,
love it.
Just
you can't
such
fail
cool
with that
stuff.
around you,
Yeah,
That's
he
really
taught a
cool.
wealth management course.
That's so. I guess talk about how that parlayed for your career after that, because that was college. Did you ever work for the man? Were you a slave to the 9 to 5?
I was never a slave to the 9 to 5, but I was a slave to the income that I made and beyond a 9 to 5. I was the guy that would get up earlier than everyone else and work later than everyone else. And, I had these, I felt like I had enough incentive to work hard on my own and just do it. And so out of college, I worked for a company called Cutco and helped scale their, recruiting and sales process, and ended up building a pretty big organization under their umbrella. And during
Cool.
that time, also built a lot of the systems and scripts and protocols that they use, and realized that what I was doing maybe was a little bit different or unique, and that there were some skills in it that I could parlay to other companies, and which I did some consulting and helped advise companies as they would scale and grow, whether it be recruiting, sales, comp structures, retention, ongoing training, all that type of stuff.
Yeah.
Sales training in general. And so it was neat to see how transferable those skills were. But what really was interesting was getting into the world of real estate when I bought my first mobile home park. And that first
Oh,
purchase,
smart.
it was like kind of scary to like put as much money down as I did. I mean, this is a big amount. We're going back about 15 years, but my first park, I think, was $65,000 down. And that was a lot for me then. But
Yeah.
that park replaced my wife's income. She was a teacher then. And so she literally retired. We had our daughter, and we just kept buying parks. We bought another park. It covered our survival income. So not enough to vacation on, but I mean, any bill that we would need to survive, it covered it. Bought another one
Wow.
that covered our lifestyle income, bought another one that covered our earned income. So we were earning more in passive income than from our business at that time. And eventually just, got to a point that we had all the surplus income. I had to figure out, how to invest it. Because if I kept buying more parks, then I would just exacerbate the problem that I'm already having, where I don't want to be, you get to a point where either your consumption increases, and maybe you dial up your lifestyle. But I felt like we had a good lifestyle. So I just dialed up our investments and just shifted from, having to balance, income with, hey, we'll save this, we'll invest this, we'll live off of this, to once you're in surplus, you can invest 100% of it.
Totally. Yeah, that's a valid point, because if you don't need it, what else are you going to
That's
do
right.
with it? Dude, that's so cool. I think that's one thing that me and Ben talk about. Probably the reason you wanted to link us up, because I do a lot with real estate too. We have a few developments here locally in Tampa. We have, Tampa and Madeira Beach. I have some stuff in Canada. I have a bunch of duplexes, fourplexes, and stuff like that in Buffalo. I've been huge into buying real estate. My whole model is make my money online and then build wealth through real estate after.
Love it.
It sounds like you kind of went through a similar, maybe more cash flow heavy, which is probably a smarter move, I've learned, and use that to build your income as you go, as opposed to building it one place and then transferring it.
Yeah, I did do it a little bit more singles and doubles over a period of time. I mean, I never had a big exit. So
Yeah.
I've had some small exits. I started a company while I was investing in real estate with a couple of buddies that took off. And that one, I've taken money off the table with them over a series of rounds. We've now had our Series B last fall.
Oh, wow.
And they're it's a very strong company in the single family home maintenance space, which is cool.
Interesting.
And so we
Very
ended up getting
cool.
some VC money on Series A and Series B, and largest VC in Texas. So that one,
Very
is fun and interesting. But I'm not involved in the day to day. I just sit on the cap table in that one and really spend most of my time today, really on my passion project, which is the lifestyle investor. I took a year off. We had enough income, didn't really need to do anything, and my family traveled the world. We went to 13 countries and just hung out. And I wanted to figure out what is next.
Yeah.
What's the new chapter? Because I felt like whatever I had done, I had gotten to a point of either mastery or strong expertise. And I'm the type of guy that I like to be a novice. I like to go back and figure something out and have a
Mm.
challenge. And so we spent a year, I journaled, I figured out what was next basically by, checking my cues. What do I do every day? What do I enjoy doing? And it was pretty simple.
Yeah.
Number one, I read every day. I wake up, the first thing I do is read for about an hour. Number two, whatever I read, I love to teach people. Number three,
Oh, nice.
during that year, I coached several of my friends to financial freedom. And then number four, I love doing deals. So I would still find some deals to do. And so, I started this fun community around those things totally as a hobby, just, an investor club. Like it's not, I didn't think it would turn into anything huge, but it became the lifestyle investor where we have 150 mastermind members, high ticket. And
Yeah. You guys are like pretty high ticket too,
yeah,
right?
yeah, 55,000 a year, but it also attracts like just an incredible group of entrepreneurs. I mean, we probably have about 20% highly paid corporate executives or lawyers,
Mhm.
attorneys, people on the corporate side, right? But probably 80% being entrepreneurs, half of which, have had an exit and half of them are looking for an exit. Last year we had 23 members have exits. Cool. So we
Wow.
got we got a front row seat. We got to coach them. We got to teach them. We got lessons learned from
Yeah.
people that had been there, done that. And it just puts you in a lot better position to negotiate with whoever your suitor is when you know their game plan before they presented it to you,
Mm.
you know?
Yeah. Certainly doesn't
Right.
hurt. Dude, that's so freaking cool, man. First of all, congratulations on building a brand accidentally, it sounds like. Uh,
Truly
there's a
is.
lot of stuff. So yeah, so in our industry, we do a lot of lead generation. So we'll sell leads to lawyers, car insurance companies, whatever. And there's a lot of guys that just know how to make millions of dollars a year online. But the problem is they only know how to make millions of dollars a year online. They're never able to translate that into something else. And even through my forays through real estate, like there's some things that have gone extremely well, there's things that have gone extremely bad. And so, like, I think someone with your knowledge base, especially for our listing group, people being like, "Hey, I have this money. Now what?"
Yeah.
Because, like, great, a checking account's 4%, but you're not going to retire off that, and I'm sure that's going to be gone in the next 2 years, anyways. Also, I'm probably paying a lot more in taxes than I'd like to be. So I imagine you probably have some good advice as far as like, helping those individuals get financially free. Was there kind of like some cornerstone fundamentals that you kind of gave them to help them like transition on, or what did that look
Yeah,
like?
certainly. I mean, everyone's situation is a little different. And to your point, a lot of people know how to make money. Obviously, most people don't, but the people that do, there's a high percentage that know how to make money. Very few people
Mhm.
know how to manage that money. Even fewer
Mm,
people know how to multiply that money. And then the
mm.
thing that's most important is making that money count, making it matter. And so, I think we make it matter not by becoming even greater consumers, right? There's like other things we can do to have impact and whatnot. And we can get into all that too. But yeah, I mean, everyone's situation is unique. And, my goal is when someone comes in and they join our community, or if they're listening to this podcast, like what I like to do, and I like this to be like a microcosm of our community. But number one, I want people to get some killer tax strategy. I want people to save hundreds
Mm.
of thousands of dollars, if not millions of dollars. And so we bring in world-class experts, and that's like first and foremost, it's an easy ROI, right? Secondly is world-class education. We want to make sure that whoever comes in is best in class. And this is on any topic. This could be scaling companies. This could be exiting companies. This, so it could be in that M&A world, or it could be on the investing side, or it could be on private placement life insurance, or it can be on, whatever the topic is. So that's the second thing. The third thing is curated deal flow. We do a ton of deals, and I love negotiating really good terms for our community. That's a blast.
awesome.
And most of them are cash
Your
flowing deals.
community has. Oh, very cool. So you guys provide opportunities to your
Yeah.
community?
Oh, yeah. Yeah. Generally, we
very
do about 30 deals a year, maybe a little
wow.
more.
nice.
Yeah. And then the fourth thing, which I think is the most important thing, is networking and connection. Being around other like-minded people that can stimulate conversation, that can, help in an exponential way with your business, because they think about it differently, or they've done it before, or they did it one way and it was a train wreck. So don't do it this way. It's like sometimes
Yeah,
you got to save yourself from the stupid tax, and being around people who have tried a bunch of stuff. It's like you can learn a ton
that's
by
true.
figuring out what not to do.
Yeah.
Totally. Dude, that's so cool, man.
It's a no-brainer
That's
if you want to
interesting.
level up. Like, I think that just first finding that many people at that high of a level is challenging in itself in the regular
Mhm.
world, right? So I think jumping into something like that would be absolutely amazing. And that's even better than just hiring one expensive coach for the year. You might get a little bit more one-on-one time with a coach, but having that big group, I just feel like the diversity in terms of like the education, the knowledge, everything, like it's just more worth it in a sense.
Yeah, far more value for
Yeah,
sure.
100%.
Dude, that's super cool, man. I didn't even know you guys
Yeah,
existed.
it's a fun little niche. We don't advertise, so probably a lot of people don't know about it. Most of the people that come in, at this point, it's probably more word of mouth than anything. But we do have a lot of people that have read my book or podcast, and I would have never guessed the Lifestyle Investor book would be, that the things that I enjoy talking about, that people actually like find them interesting, right? Uh,
I
so that book,
bet your wife's confused about that one too,
right?
huh?
Yeah. I'm crossing my fingers. I'm like, man, I hope like 100, 200 people buy them. I mean, I had a friend tell me most people never get to 10,000 books. So if you ever get to 10,000 books, like you have made it. So I'm like, all right, well, maybe I
Yeah.
can get there in a few years. So maybe I can get to 1,000 this year. And we literally sold 10,000 in the first like 2 or 3 days.
Oh,
And then
wow.
became a #1 Wall Street Journal bestseller, USA Today. And then as of 2023, it's a top 1% of all books ever sold.
Holy
Wow.
smokes,
crazy.
man.
Congrats.
Congratulations.
by volume. And 100% of the proceeds of that book go to fight human trafficking. So we've donated hundreds of thousands of dollars
Oh,
on behalf of
amazing.
those efforts, which is really cool. We partnered with
Totally.
Tim Tebow Foundation and Love Justice International, just some killer groups. And we got to do some behind the scenes with Tim Tebow just 3
Wow.
weeks ago, and their foundation and their business. They're doing some really cool things.
That's right. We have that mutual
That's
friend
right.
there.
Yeah, because I was in town. I was in Jacksonville.
Yeah, that's so funny. Because I was at Bobby's house the day before, and he's like, "Oh, I'm flying this Tim Tebow thing." So when you and I were exchanging emails, it was pretty
Yeah.
funny.
So, and I saw Bobby there, which is cool. So he's like, hey, I'd love to be on your podcast. So I was like, well, I'd love to have you on my podcast. Let's do it.
Yeah. We're actually gonna have Bobby on pretty soon. He's been doing some coaching with me recently.
Nice.
Because his knowledge is insane.
Dude,
What
so
he's
smart.
accomplished is unreal.
Yeah. For those of you
Yeah,
that don't
super
know,
smart.
and he'll get into the story, but he had $1 billion exit, and it was totally bootstrapped. I mean, I think he borrowed like $1,400 from his mom, and that is it.
Wow.
It was I think 1,700 from his mother-in-law.
Oh, there it is. All right. You have the stats better than
Yeah.
me. Well, it was like
Yeah,
nothing,
pretty much the same
right? It's
thing.
like,
And,
holy cow.
Totally. And then his real estate empire is insane too.
Right.
Like I think he's got north of 700 million he publicly talks about. So I'm not releasing anything secret. It's crazy. So cool. But no, that's awesome, man. As far as like real estate, when people are coming to you, they want to create passive income, they want to do something. Do you recommend real estate as one of the first channels they should look at? Or how do you feel about real estate as a
I
whole?
love real estate. Now, I think the caveat is you got to buy right. And, the market today is different than it was the last 10 years. So
Totally.
not all real estate's made the same. And I would say cash flowing real estate I like better than any other kind. Yeah, I've done it all. I've invested, you name it, unless it's super obscure, I've invested in it over the last 15
Wow.
years. And so, for me, if it cash flows, I like that because you're de-risking the deal every month that you're getting a distribution, right? That you're getting some capital. And I like the tax benefits. And for me, with real estate, if you buy right, it's hard to lose money. Meaning,
Mhm.
you're not in a bidding war where it's being bid up over the value, meaning that you've got a
Mhm.
good spread in between the cap rate that you buy it at and the interest rate that you're able to secure. And
Mhm.
if you can do that, it's hard to lose money. Now, you are capped, right? So your upside, you're not going to have exponential growth over 5 or 10 years. I mean, maybe it's exponential over 50 years, but
Mhm.
with business, for example, like I love businesses. They're super risky. I mean, we know right out of the gates that 96% of them don't make it, 95%, I
Mhm.
guess. And then at a certain level, once you've been in business 5 years and 10 years, it's like the percentages shrink of, you're eventually at top, 1% likelihood of success, right? But
Yep.
but the upside is it can be exponential, but your downside is so much bigger. So yeah, for me, it
Yeah.
was a more comfortable, more safe way of doing it, especially as a business owner that already had a business and therefore, had a portfolio overly allocated to a risky asset
Yeah.
where all my net worth is tied up in as a business owner early on, right? Like I'm 100%
Mhm.
private equity and it's all my business and my business makes it, then I'm going to do pretty well. And if it doesn't, I'm going to fall flat on my face. And most entrepreneurs do that.
That's real. It's interesting to think about in that terms of like, what's your portfolio? Where do you make money? If it's all business, yeah, that's super high risk. So it only makes sense. Do you guys kind of like kind of like to your point earlier, I guess it's very dependent on the individual. Would you guys kind of have like an overall diversified plan that you encourage people to follow?
Yeah, for sure. And I think it's probably different depending on where someone is in their life, their age, their how long they've been in business. Do they like their business? Do they not? Do they want to exit? Do they want to keep it and just bring in a C-suite? Do they or did they just exit and they're sitting on cash? So I mean, all these situations are different, but I study the wealthiest families, so like the family offices who manage money of the wealthiest people, they put out these reports so you can figure it out. These banks put out these reports on their private clients, high net worth.
Mm.
And so, I try to study the centimillionaire and above, the 100 million, the demi billionaire at 500 million, and then the billionaire at over a billion, right? And what do they
Mhm.
do? What's their allocation? Because most people become wealthy via concentration in their
Mhm.
primary business. Most
Mhm.
people maintain and grow their wealth once they get there via diversification. And so, yeah, we're
Mhm.
always talking about asset allocation and
Interesting, man.
where are you today and where do you want to go and who should we model after? And I think it's funny
Mhm.
because most people think that you get rich in the stock market, and that's just not true. Very
Yeah.
few people get rich in a market that is so efficient, that is overrun with quants and algorithms. And like, if you've read Michael Lewis's book Flash Boys, you'll see that it's totally rigged. There's no way on a trading standpoint you're ever going to keep up with these, algorithms that can trade 20 times inside of the one that you can get done in that same matter of time.
Yeah. Half second.
So you got to
Totally.
search for inefficient markets. That's where the largest
Interesting, man.
returns are. Yeah, and
That's interesting because when you talk to financial planners, they'll be like, "Oh, over the last 50 years, the S&P, blah blah blah." But if you start taking into consideration the fact that there are all these like quant shops that exist, and like I know some that have moved within as close as they possibly could to the stock exchange because that timeline to transmit is shorter apparently.
totally,
But they're burning trades like insanely
totally.
fast. Like the average guy can't keep
Yeah,
up.
and think about it this way. So what's touted as the safest asset
Right?
allocation in the stock market is a 60-40 split, 60% stocks, 40% bonds. But last year is one of the worst performing in the last century. So in 100 years, I think it ended up, at one point, it was the worst. I think it ended the year at like the third worst ever in the last 100 years, right?
Wow.
And that's supposed to be the safest. And I know we're having a rally right now, but like if you retired last year, you're in trouble. You can't just make that back up that quickly in a rally. And so I find
Yeah,
it
yeah.
pretty interesting to see like how Wall Street wants everyone to think that you make your money there, but the wealthiest people actually made their money somewhere else and then put about a quarter percent, 25% of their net worth into the stock market. And most of them don't even do it for the returns. They do it because the assets that they want to buy, they can use leverage and margin to borrow against it and not have any,
Yeah,
taxable event. Right.
totally.
So like looking at these family offices, and by the way, there's one of the biggest name.
Dude, that's so true. I
Yeah.
love this.
There's one of the biggest name endowments in the world that literally only had 5% of the entire endowment in the stock market last year. And so like think about that. And then most of your family offices are somewhere between 15 and 25%. Maybe some
Mhm.
might lean on that 30%, but most of them are generally even like 15 to 20%. Um, but the vast majority of wealthy people, they've got over 50% of their net worth in alternative investments. So,
Mm.
generally it's about 20, 25% in real estate and 25 to 30% in private equity, right? So it's fascinating that most people don't know that.
Yeah, yeah, no, that is, man. Very interesting. That's a different perspective. I've never got that before.
Yeah,
Thank
and
you.
it's not to say you shouldn't bank on the US economy and that it's not a good play. I just think for anyone to say, well, you diversify in the stock market by doing 64. No, no. You diversify by having a percentage in the stock market, you know?
Yeah, yeah,
And that percentage, most people have all their money in the stock market. Hey,
totally.
if it works, like good, but that's a lot of risk. I mean, I
Yeah,
wouldn't
yeah,
have all my money in real estate either. I wouldn't have all my money in, my company either.
totally. No, to your point too, like I have a friend, they have a fairly substantial family office. They sold a huge suite of real estate and they pulled out like 1.5 billion. And he was saying the only reason we keep in the stock market is because we can borrow
That's
against
right.
it insanely cheap. And the liquidity is
That's
instant,
right.
which is obviously one of the downsides of real estate. There's liquidity, but it's just never instant, especially right now.
That's right. And it's interesting, today you are paid really well to be in treasuries. That wasn't the
Mhm.
case 2 years ago, right?
Yeah.
Or even a year and a half ago, right? So like it's different. Things have shifted. We're seeing a lot more on the private credit side, and you'll see
Mhm.
anywhere from 5 to 15% of these asset allocations in private credit, which that's not something that most people even think about as an asset class.
Could you explain what private credit is? Because I actually don't
Yeah,
follow that.
so, like, on the public side, you've got stocks and you've got bonds, and that most
Yeah.
people think of diversification through those 2 lenses. So think about bonds, but on the private side, it's debt, but instead of it being publicly traded or publicly available, it's, negotiated through private agreements, and so the
Interesting.
returns
Gotcha.
are
Like,
generally higher.
that makes sense. Interesting. So it could be like me or Gabe loaning, XYZ some cash, XYZ company.
Yeah, but what also happens is you have your ability to prioritize your position. So you can sit in a senior secured position. You can have collateral
Mhm.
backing it. In many cases, you can have 3, 4, 5, 6 times the collateral to the value of what you're
Wow.
lending. So if there's a
Yeah.
default, you come out ahead. And so
Yeah.
there's a lot of leverage or pressure to really see that the agreement is executed on as designed, right? Like there's
Yeah. Totally.
it creates the leverage for people to actually do what they say they're going to do. And if not, you're not taking a huge risk. You're going to be covered.
Fascinating. Man, I've never even like I love that because for the investor, it's certainly a win-win because if they default, you're still
That's
ahead.
right. Yeah, it takes the risk out. My book has a subtitle called "The 10 Commandments of Cash Flow Investing for Passive Income and Financial Freedom." And so
Yeah.
commandment 1 is lifestyle first and really getting people to get clear on their lifestyle. Cause I think it's important to not be living in default, but to be living by design and with intentionality, like proactively, what do you want out of life? Not like running from meeting to meeting.
Yeah. Yeah.
But number 2, the second commandment is de-risking the deal. And I go through all these ways to
Mhm.
de-risk a deal. And some of it is what we've just talked about right here. Most people think investing is risky. It doesn't have to be. Um,
Dude,
and by the way, some of it can be, but if I'm going to do
Mhm.
high risk in anything, why not establish, like, buy an asset that produces regular monthly income? And then what about having that monthly income actually purchase or invest in the risky stuff? That way, if it doesn't work
yep,
out, you didn't crush the seed or the foundation that will continue to make these distributions.
totally. I love it. Dude, that's so cool.
I could geek out on this
Because
all
you
day.
are
I mean,
yeah,
I love
no, my
investing.
mind's spinning, like, can you give people an example of, like, a deal you did and how you were able to, like, de-risk it? Because, like, just so even for myself, so I can conceptually wrap my head around it.
Sure. Yeah, this will be fun. All right. So I bought a dog training company. Um, you're probably wondering how many dogs I own. Zero. I've never owned a dog. I don't know the first thing about dogs, but I noticed in COVID, all my friends were buying dogs. All my neighbors were buying dogs. Everyone is buying dogs. So I'm like, all right, there's got to be something here. And these dogs are, tearing these homes apart and, chewing stuff, going to the bathroom, whatever. So I'm like, okay, there's a market here. So bought a dog training company. This dog training company, I felt like, had room to improve. It wasn't really optimized for SEO. There's some technology that we could lay in, some systems that we could lay in. Like there were things that we could do. One of my
Mhm.
friends and someone that I had worked with in previous businesses, and had worked under me, we partnered. He was working in corporate America at the time, and he was making 60,000 a year. And I said, well, what if you made so the person that was running the business was paying himself a salary of 70,000 a year. Oh, what
Yeah.
if we pay you 70,000 a year? You get a $10,000 pay raise, and I give you a bunch of equity in the business. And so he's like, all right, let's do it. So we end up buying this dog training company. We really tweak the SEO. We get this thing humming. By the way, Patrick Mahomes trains his dog in our studio, which is really cool.
Oh, very
Very
cool.
And
cool.
and so this company, so I was able to get my bank. I had my operating partner handle everything because I wanted him A to Z to do it all. So he had to get the bank
Yeah.
loan. He had to do everything. This was truly a passive investment for me. If he needed some advice periodically, I give it to him. But I really wanted him to run with it. And so I had put in, what did I put in on that? I think I invested like 130, somewhere between 130 and $150,000. Uh,
Mhm.
and then we used leverage for the rest. Used one of my banking relationships. Well, this,
Was that like 75% was, 25% equity, 75% debt?
yeah, yeah, probably right
Nice.
around there. Yeah, maybe it's even 20. It may have even been 20% equity, something
Got it.
like that. Well,
You paid between 6 and 700K for it, ballpark.
yeah. And
Interesting.
so what ended up happening is this thing just started kicking off cash. So in 4 months, so we grew the appointment schedule, we grew the number of trainers, we basically maxed this thing out as best as we could. We
Mhm.
got to the point that I mean, we had consistent days that we were profiting $10,000 a day until we literally maxed this thing out. And so
A dog training business?
yeah, yeah. I mean, it's crazy. I mean, this is when
Dude.
we were just scaling the appointments. And so what ends up happening is I have all my money out of the deal by month 4. I've got no risk in this thing. It's all house money at this
Yeah.
point in time. We keep scaling it. My partner feels like the market may not stay as hot. There might be more competition. The person we bought it from, like, he was thinking about maybe opening up another one. He had tried, or I guess he successfully recruited some of our staff away. So my partner's
Mhm.
like, do we really want to do it? And I was like, I do, but he really wanted to sell it. So I said, all right, we'll do whatever you want to do. You're running it. So we sold this
Yeah.
thing at a year and a day. So long-term capital gains, but it was just
Yeah.
shy of a 12x. I think it was like 11.9x our money in that time frame, which is pretty cool.
Wow.
So that's
Yeah.
just that.
Dude, that's
So that's an
awesome.
example of the business, right? And a few ways that we de-risked it. Number one is that I figured out how to, and that deal, what did I do? Did I sign no personal guarantee? I think I was able to do that with no personal guarantee. Another one that I did with him, we were able to negotiate me down to only um, a 19% personal guarantee. That one I think
That's
was
what
a
they'll like.
0% personal guarantee. And by the way, I think people don't know you can negotiate your personal guarantees to fall off. So like it
Sure.
whatever year, it's like it's cut in half. So maybe it's like in 2 years it's cut in half. And as long as we've, done, on time payments, by year three it falls off. Like we've done that before.
Yeah.
But then the other thing I did to de-risk the deal is I told my partner, I'm like, hey, I'll put in all the money, but since I have all the financial risk, I want to be paid. I can't remember if we did an 80-20 split or a 90-10 split. I think it was 80-20. So any distribution we make, I get 80% of it until all my money's out. And then we
Mhm.
revert back to what the actual equity split is. And I
Yeah.
gave him, I gave him a killer deal because he's a great guy and want to help him, get out of the rat race. So, even though I probably only had to give him like 5 or 10 or 15% equity, I ended up giving him 60%. Him and his wife got 60% of the company.
Nice.
And they
Amazing.
worked hard. They did a great job. They're great people, and it really is a winning situation. But those are just a few ways where, like, number one, I was able to get cash out quickly and cover, where I was at. Number two, didn't have the personal guarantee. Number three, we were able to scale it, and I knew what we could do if we opened up the playbook. And so
Mhm.
those are just a few ways that, like, early on, I couldn't lose much. By month 4, I couldn't lose anything. Like it was
Yeah, I
all
know.
profit from there on. I had zero risk. It was all house money.
The
That's
best part, you
amazing.
were passing on the whole thing.
That's right. Yeah, it honored
Dude, that's so cool.
commandment number 1, which is lifestyle first. I didn't want to buy a job, and most people that buy businesses buy a job. They just don't realize it.
Yeah.
Mhm.
Dude, that's
The
awesome.
operator is so important. It's like I wouldn't even imagine running a business if either A, it didn't come with an amazing operator that I knew I could maintain or retain for a long time, or B, that I could plug someone in from my network to run it. It would be off the table. I wouldn't even consider it.
No, that makes sense, man. I like that. I like that you've actually it's almost like Ray Dalio's principles, right? What are the principles that he follows as he goes into anything he
That's right.
does?
Yeah. And same thing with like investor criteria. Like everyone should have investment criteria, or if you're going to acquire a business, like business acquisition criteria, which is criteria you make in a good frame of mind that you're not going to be tempted to deviate when emotions come into play. Like from an
Mhm.
investment standpoint, usually when emotions come into play, we make poor decisions. Same thing on the business side,
Yeah.
right? So how, when we're in a good frame of mind, do we create rules and criteria that we abide by when emotionally we might end up getting weak?
Dude, that's some good wisdom right there. Because it's insane the decisions. Like I notice even for myself, a decision I'll make in the morning when I'm bright eyed, bushy tail, ready to go, versus a decision I'll make in the
Right.
evening when I'm tired, maybe a little beat up from the day. Those can be opposite
That's right.
decisions.
100%.
Interesting, man. Out of curiosity, if you're down to share, what's been your biggest win that you ever had on a deal from an ROI perspective?
Yeah. So let's see. Um, ROI. So we just did a deal in our mastermind that was what, 16 months, 74% IRR.
Wow.
That one was pretty good. But I had a deal. So one of the deals that I did, I was able to not invest any money. I was able to take a portion of revenue, a small percentage of revenue. I forgave a loan with a kind of like a shared company. There's a third party company that we had an agreement with. So I kind of forgave a loan there, established a new relationship. And so I didn't really put anything into that except legal. And that's a multi-million dollar return with a zero
Wow.
dollar investment. So that's one. I've had a handful that are like that, where I put in
Interesting.
little or nothing. Even, the maintenance company that I started, I set up a revolving line of credit only at 40,000, it capped at 40,000. But part of the secret sauce that I put in, I had some expertise on structuring, even the legal side, the insurance side, hiring, training, recruiting. But I was able to, at a time where my partners didn't have the available credit, I was able to kind of set that up. And that one move resulted in, 7 figures where all I really put in, I think, was 10K of actual
Wow.
dollars and then 40K of a line that was paid back.
Wow.
Huh.
So, I mean, it's,
That whole saying of like it takes money to make money is simply not
yeah,
true.
it's a fallacy.
Like,
Now, I mean, you can take money to make money, but
yeah,
but you can also creatively structure deals. You can also find win-win situations. I mean, partnerships, collaborations. Like I've done a ton of things where maybe no money's exchanged, but it's like, hey, why don't we share? I can share this hack, or I can connect you with these people, and we can find a way to win together. And if we don't, no harm, no foul. Like I'm not trying to collect on something if I can't deliver, but if we do, then something, there's some financial compensation. And so I've done a lot of those over the years.
very cool, man. One thing that I've kind of come to the conclusion as I've grown, my biggest asset is really my network.
100%.
Because my network has brought so many opportunities to me that like just would not have existed before, or knowledge on taxes, on real estate, whatever it is. And not all of it's good, obviously. But when you get the right advice from the right people, it's like it could be a massive shift in how you're doing. What would you think about
Yeah,
that?
to me, there's no better place to invest time and capital. Your network, your peer group, your coaches and mentors, like that tier. I mean, those are a few different tiers of people, but it's like your peer group's who you're spending the most time with. Your network is who you have access to. I would say like experts and advisors could be part of your peer group or your network, right? And then coaches
Mhm.
and mentors. But like that to me, there's no greater money spent or time spent than establishing that. That's going to give the best return, and it's going to give a consistent return. And then on top of it, you get to do life together. For people that
Yeah,
you
Mm.
build real, authentic relationships with, you help each other win. You get a chance to be a mentee, you get a chance to be a mentor. I mean, that to me is living life.
Mhm.
totally.
Yeah,
That's awesome, dude. I love it.
I agree with that for sure.
Two final questions, man, because I'd really love for people to obviously, I think there's been tons of tangible stuff in here, but say someone's got $2 million cash, maybe they're making $500,000 a year. It's only because I know a bunch of people I can think of that are probably in this situation. What would you advise them to do?
Well, I wouldn't advise anyone to do anything. I might coach or teach them. I'm not allowed to advise, but I
Got
could coach or I could teach.
it.
And really, what I would say is, don't rush to do any investment. Uh, when there's a time limit and you're feeling pressure, like that's the worst time to make a decision, right? You don't have to rush
Mhm.
through it. Everyone thinks that there's a deal of a lifetime. There are tons of deals of a lifetime. Most people go into all investments thinking this is a great investment because I got it from my friend or I heard about it, or I just think it's great because I don't have you know 5,000 reps of deals that are bad to know.
Yeah,
And so
yeah.
if you're going into it like this is a good investment, maybe I'll see if there's anything wrong with it. That's a lot different than most deals are not good deals. Most deals lose money. Therefore, any deal I get, I'm going to act as if it's a no unless I can prove that it's a good deal. Right? Two different
Like that.
mindsets of starting as a
Mhm.
no versus starting as a yes. And so I would just say to anyone that's in that situation, it's all about don't outsource your financial literacy to other people that maybe haven't earned it and maybe aren't as good as you think they are or they proclaim to be. I would
Got it.
say instead of rushing to place that money, rush to learn and become educated, rush to get in communities that have the right people and have deals that have been vetted and have trusted people that have actually done the diligence on it.
Mhm.
Work to establish relationships with people that have long track records of success. And so yeah, I wouldn't rush into any of it. And once you're ready, I would probably allocate over a number of deals. I wouldn't put too much into one deal. I'd never put more than 10% in any single deal, probably never more than
Mhm.
5% in any single deal. I
Mhm.
probably wouldn't put more than 10% in um, any single sponsor or general partner. Yeah,
Mhm.
those are just a few things. I mean, I think it
I love it.
yeah. I mean, I got a ton more, like, we could drill down into the specifics, but
Yeah, I can imagine, man, just the way you riled them off. You played this game
Oh
before.
yeah.
Yeah.
Uh, so my second one was, say someone has a job and they're making 50 grand a year. What would your advice be to someone like that? So they're probably corporate America or equivalent, and they're just trying to figure this stuff out.
Well, first off, I would ask, do you love your job or do you not? Their answer there would probably move me in one of two directions. But I think if you love your job, then you keep doing it and you find people that you can that can help you grow your wealth, but
Mhm,
not just from like, oh, I've got a financial planner and all he does is invest in the stock market, right? Like that can be part of it. It shouldn't be all of it, right? Um,
mhm,
and secondly, if you don't like your job, life's too short. Find something that you do like. We're
mhm,
not all cut out to be entrepreneurs, but if you have an itch, you might as well try it out. The younger you are, the better it is to try it out. You know, once you have a family, you're gonna probably take less risks. And I think
mhm.
no matter where you're at, if you want to earn more, find a side hustle that you can do. And so even if you don't like your job, you could safely leave by starting a side hustle or doing something on the side where you're maybe growing that income. Um,
Mhm.
but yeah, I would say that you want to condition the habits now that you want to have later, even if it's on smaller dollar amounts. So some people are like, well, I only earn this. Well, yeah. How do you think you're going to invest and save it later if you don't do it now?
Yeah, yeah. So be a good steward.
Yeah.
My usually what I try to tell people is get educated and build your network. Find people who are doing it. Because I found just being even the proximity, opportunities just come your way. Because people like if they like you, if they trust you, eventually they're gonna need something. So if they can offer you the opportunity, they're happy to do it. So that's kind of what I've impeached with people, and that's definitely helped. But man, this has been awesome. Thank you
Yeah.
for
Thank you
popping
so
on. I think
much.
we're
Oh, this is
pretty
fun.
close to an hour
I
here.
love this stuff.
Um,
And by the way, one
Yeah.
other
yeah,
thing I will
fascinating.
say, if you have access to a deal, you probably don't even want to do that deal because the deals you want to do are the deals you can't get access to. And you need
Amazing.
relational capital to get into those deals. That's where you want to be.
I could see that.
Quote of the podcast right there.
There it is.
um, where can people find you, buy your book, follow you, listen to your podcast, all that stuff?
Well, everything is at lifestyleinvestor.com. If anyone from your community would like to, take next steps or learn more or get, a free strategy session, they can do that at lifestyleinvestor.com/consultation. We
Okay.
can walk them through, a ton of things, even, some goal setting and whatnot. But um, everything that we do from, our online class to our master classes to the mastermind podcast book, it's all there. We are launching our very new tax course, a tax master class that we just recorded. One of our mastermind members is actually, she works for Fox Sports as a producer. She's pretty high up. And so she helped
Oh
us
wow.
produce this, and it should launch in the new year. And this one I'm really
Very cool.
excited about because all someone has to do is one of the 28 strategies that I go through, and they can reduce their tax bill significantly.
That is awesome. Yeah, I mean, just optimizing your taxes alone is such an easy opportunity for so many people. Sorry, lifestyleinvestor.com/consultation.
Yeah,
We'll
yeah,
we'll get that link and we'll get it plugged into the bottom of the podcast so people can just click right through it. Um, perfect.
Yeah.
Well, thank you so much. I really
yeah,
appreciate your
Yeah, it's been a
time.
pleasure.
yeah. Thanks for having me
Yeah.
on.
Thank you.
I'm glad Ben connected us. He's world class, and I figure whoever he knows is probably world class. So, and
Yeah.
that's the truth of you guys. You guys are a ton of fun. You ask great questions, and
Yeah.
I love that you're out in the world doing great things for entrepreneurs. So, keep it up, and
I
it's,
appreciate it.
it's
Yeah.
Thank
so
you.
cool.
Yeah, it's definitely very rewarding in that
Yeah.
sense. So likewise, man, appreciate the work you're doing.
I
Think
apologize for not being more engaged, guys. My throat's just like really rough right now.
life will
You
get
got
you.
to
Yeah.
chill. It's good.
It's
That's
all good.
right.
I just got to learn, right?
That's right.
Awesome, guys. Well, for everyone listening, please give us a 5-star review on iTunes. Spotify, Amazon, and Stitcher. And if you're on YouTube, please subscribe to our channel. Thank you very much. And we will see you on the next one. Thanks again, Justin.